I want to introduce everybody to Ken Bagner. Before I get to that, I just kind of want to let everybody know that for those of you that haven't seen me before or are new to my LinkedIn or YouTube pages, my name is Matt Rosenthal. I'm the CEO of Mindcore Technology. We are a technology service provider, and we serve small and medium businesses around the country. What I do is I interview people that I find interesting and that I believe have information which if I can share it would be of help to other business owners or people in general that just might find value in the information. So that's what leads me to introduce you to Ken Bagner. I've known Ken for several years, but one of the things that specific to Ken is his diverse experience and the way he stays on top of what's really happening in the marketplace specific to his skill set. So let me tell you a little bit about Ken. Ken is a senior partner at Sobel and Company, which happens to be one of the top accounting and tax and business advisory firms in New Jersey. Ken's a standout in his field. He is a CPA. He has a master's degree in taxation. He's also a partner and chairman of the tax practice, which is a subset of the overall organization. Ken's a consulting partner of the firm's employee benefit plan audit group. He has been with Sobel since 1999 and serves in a wide variety of niches. So some of those are, for example, commercial real estate, waste management, manufacturing, retail, wholesale, nonprofit, employee benefits. So as you can see, that really backs up the idea that Ken has a very diversified background. He also works closely with a lot of small and medium business owners as their trusted consultant, right? He's an advisor. They go to him for all sorts of decisions and all sorts of guidance. His credentials specifically, he's a CPA. He's a member of the American Institute of Certified Public Accountants and the New Jersey Society of Certified Public Accountants. He serves as the board trustee for the NJ CPA Scholarship Fund. He donates his time to the Metro YMCA of the Oranges, where he has served for 5 or 6 years as the audit chairman on that audit committee, and also to the New Jersey Society of Certified Public Accountants. He's also a past member of the board of directors for the New Jersey Society of CPAs. Yes, this is a long list. He's a very qualified individual. He had 7 years as an adjunct professor at Rutgers University, where he taught both taxation for the undergraduate level and the Certified Financial Planner program. He's also been featured in the Wall Street Journal and has co-edited a book on taxation. So I want to welcome Ken to today's conversation. You still awake? It was a very long introduction.
Yeah, I appreciate the introduction. Lots of things to cover, but thank you. So I'm going to follow your lead here, Matt, on what you'd like to discuss today.
Okay. So look, we're obviously in the middle of, there's a lot going on with the virus, the pandemic, and kind of the position that it's put many of our businesses in, and the government is doing their best to try and come to our aid, and so they've put a program out. And I think today what I want to do is take a deep dive and look at the new SBA Loan Program, or as they're calling it now, the Payroll Protection Program, or PPP, that was passed by the federal government. I'd love to dive into your expertise and your knowledge on the subject, and if we can really just kind of approach it from a point of view of small, medium business owner, like what are they thinking about? What are they potentially struggling with? What are they experiencing? And kind of walk through what that whole experience has been for them and is going to be. And I say it like that because it keeps changing. I'm involved in it. I've applied for it, and I think for 5 days in a row, it's been something different every day with the bank that we work with. So just a high level, kind of summarize what I want to talk about is the program itself, the sick pay leave, business tax provisions under the new law, and individual tax provisions, and any other miscellaneous just topics that you think kind of make sense. You've been in it. You've probably got some cool stories to share and just some experience just from the past couple of days. So with that, and before we dive right into that, my first question is, how has your experience been working at home? And Not just, kind of, hey, I'm going to work from home today. Actually working from home, and that's it. Like everything's remote. We're all doing remote meetings. Like, how has your experience been?
Yeah, between dealing with the children at home and my
Right.
wife, and never knowing at some point in time when you're on the phone and they may go into some sort of discussion that's a little bit loud. That's always interesting to deal with. It's a little bit different working at home. I do pick days here and there to work at home, so I'm used to working on a day, but it feels like Groundhog Day. I feel like I'm
Right.
getting up and doing the same thing every day. But we've been very busy with this, Matt, 18-hour days to try to help all of our clients to go through, especially this payroll protection program and how that works. So I know you wanted to kick that off. So I could kick that off and talk about this. And the biggest thing I could say on this is, who doesn't want free money? This is what this program is. The program, you're able to basically get a loan from the government, and it's subject to zero federal taxation on what's forgiven and zero state taxation as well. So starting there, I mean, that's a wonderful program. Now, not all of it may be forgiven. So what you have to do first is apply and receive the loan and receive those proceeds, and then a portion of that loan will be forgiven, which we'll get into it in a minute. The big thing holistically from a 30,000-foot view is you got to make sure, because it's an SBA program, but you have to go through your bank. Make sure your bank is taking these applications. Some of the banks still haven't taken applications at this point. They're not ready. We have a whole list of them if you need that list. If Matt, if anyone reaches out later on, we have a list of the banks taking them at this point in time and which ones aren't. Some of them have said that they're not taking any applications if you have over 50 employees, because this program is for 500 employees or less. And there's a whole definition on that. But basically, some of the banks are saying they're putting sort of criteria on this as well. So you want to be very careful that you have the right partner, because you essentially get this loan and then you pay your payroll for 8 weeks period, and you pay your rent and utilities. Those are the allowed expenditures for this program, and you're able to get a large portion of that forgiven. So the way it works, Matt, just to kind of go through, there's a couple
Listen, go
big
slow.
provisions.
Go
A
very
couple,
slow.
couple provisions here, and from a loan standpoint, I just want to talk about for holistically before I even go into like the data of how this works. There's no, there's a 1% interest on the loan. It's a 2-year loan. There's no collateral. There's no personal guarantee. So think about that. When you go to a bank, they usually typically ask for a personal guarantee and collateral. There is none. There's
Is
no
that definite? That's not going to change. They're not going back and forth on that because I've heard that even from my bank that I applied to, that they were still not sure. They were worried actually about how would they not be held responsible down the road.
It's definite in the law for the PPP program. That's the acronym for the program. And so not only that, if you want whatever's not forgiven, you could take it out at a 1% rate for 2 years, and you could prepay that anytime you want. I don't know who would want to at 1%.
At
It's
1%,
basically
right?
it's
It's
basically
free
free
money.
money, but you should probably wait for the 2 years to end and pay it. And there is some talk about that 2-year program, depending on what happens with the economy, being extended to a 10-year loan. So that holistically, that's how the program works. When you think about all those factors, Matt, you think about no guarantee personally, no collateral, the interest rate. Now, what
You
can
said
you
1%, right?
1%? What can you receive? That's the next question, right? So in order to
Before you go into that, you might have said it, and I apologize if you said it already. The people that do qualify for this are what is there parameters around who can't apply for this? Like who can apply for this?
almost every business can apply except for a couple businesses. For example, if you're in the business of loaning money, they don't want you taking that money and reloaning it and making a spread off of it. It's to help businesses who are struggling. There is no proof, and this, I'm glad you asked that question. You don't have to show a disaster. So you could be running your business, it could be running at full steam right now, and you have sort of that type of business. I have companies that are doing all different things. Like I have a company who sells beer. I have a company that sells disposable wipes. They're, those are all very high in demand right now. And even though they are, flying high as far as their company, they still can, apply for this program.
And as far as the number of employees, is there a limit to that?
500 employees or less.
Okay.
There's some calculations if you're over that and you have part-time employees where you could still get under the 500.
What about 1099s, like people that work as contractors, but that are essential to your operation?
They are not excluded. They're not included in the program at this point in time
They're
anymore.
not included.
Not included. They used to be included. Everybody thought they were included, and the IRS came out with a ruling 3 days ago, being very clear, unequivocally, they're excluded.
Okay. So if you tie that all together, there's no collateral, no PGs. So I guess there's somebody watching. At some point, there's going to be a way that there's some oversight on all this. So while it's that loosey-goosey, at the same time, they're saying, but there's no contractors allowed, right? So how can they police certain parts and not the other? Like, what is there?
Well,
Has there any plan been put out for that?
well, that's a good question. I was talking to a friend who's a banker, who's receiving these applications, and they're telling the bankers to sign off on the applications that everything's correct. So the government's basically saying that it's the bank's responsibility to prove out this data. The banks are very uncomfortable because they don't have the time to prove out all this data. So that, they have thousands of applications, and some banks tens of thousands. Right now, they allocated $350 billion to this program. Now, what does that mean and how fast that gets used up? The program is first come, first serve. So if you haven't figured this out at this point, you need to start working through this to get this application in. I talked to about an hour ago, a bank who's a very large national bank, and they still said there's plenty of money available at this point in time. So you're not too late to the party at this point in time, but if you haven't gone through this program to figure out what you can get, you should definitely go to figure that out now. It's
So let me
something.
ask you a question. I'll use me as an example. You were nice enough to send me some information a week ago, which was actually the thing that made me have the idea that we should have this conversation and try and help other people out. I immediately took what you sent me, gave it to my CFO, and I'm like, we gotta do this. And we did the application, and then day 2, bank came back and said, well, no, you gotta do it differently. Day 3, oh, you gotta do it differently. Eventually, I got something back that said, okay, you're submitted. It was some kind of like validation or verification. And now we just sit and wait and wait and wait, and we have no idea. So how does anybody know if you're getting anything or if the money runs out, or if you're like, where are you in line?
Well, like I said, first thing you should do is check your bank and whether or not they're going to loan to you, because there are articles on the internet on certain banks that there's issues with. So if you have a current bank that has that issue, you definitely need to look to see if you want to get a different bank if you fall outside the category. Secondly, from what I understand to be true, after your application is submitted, then they may come back and ask you for some additional information if it's not there. The bank's supposed to be doing that. I'm not so certain the bank has time to prove this stuff out. They only have a certain amount of employees. It's basically, think about the bank having every one of their customers, because they're taking their customers first, all apply for loans at the same exact time. It's not physically possible for them to review all this stuff.
Yeah.
So what I think's going to happen is these things are going to go through with limited review. Then from what I understand, within a 2-week period, you should be getting funded. Now, that's left to be seen, depending on how fast the bank can be able to fund everybody, because they're going to have to figure that out. But that's what the government's saying, is they want all this, once the application's approved, within 2 weeks for you to have money in your hands, in your bank account.
I'm going to put you on the spot. You deal with hundreds of businesses. Are you aware of anybody that you know yet that's been funded?
Zero.
Right.
But actually, only a few have been approved and submitted. A lot of the applications have gone in and they haven't been even put as a submission that have been sent to the SBA. I've had probably about 10% of my clients be submitted at this point in time. The rest, it's in with the bank, but they haven't submitted it with the SBA.
Okay. That's a lot of information right there.
And we haven't even gotten into how the program works.
Yeah, I feel like that was really valuable. Like that was really good information. So, all right, so to summarize, it's a 2-year loan, no collateral, no personal guarantee, 1% interest. If you have 500 full-time employees or less, you qualify. Um, Send the application in, send it in quick. It's a lot of money available, but it's going to go quickly. And make sure you check your bank to ensure that your bank actually can help you. And you should probably go through your bank because if you go through a bank that's not yours, you'll definitely not be in the front of the line.
Everything that's 100% correct, Matt.
Okay,
That's exactly a good summary of overview.
beautiful. So let's jump into, I guess, what would be the next logical step for you to talk about
Well,
next?
well, just to talk about how the program and not getting to every detail. If you need more help, you could reach out. But holistically, the way the program works is you take all your employees, and there's two different periods banks are asking for potentially. One is your 2019 year payroll, and another potentially is a rolling 12 months, which is April 1st, 2019 to March 31st, 2020, which is a recently passed month. I see
Right.
I see banks really saying do it either way. I would say
Okay.
try to do it probably on a way that works better for you. If you've hired more employees, you have more wages, you probably want to do the rolling 12. Every employee you get up to $100,000 for the year of their pay. Now, employees who make less, you get less. Then what you do is you add in their medical benefits, and you add in their 401k, and you add in if the state that you're in has state disability or unemployment insurance you pay as an employer. When I say 401k, that's the employer side of the 401k. This the state
Right.
disability and unemployment is the employer side. You basically take a look at your payroll costs first. Your payroll's capped at 100, then you could add all those expenditures on top of the $100,000. Which, by the way, when you talk about ever changing, that guidance changed around 10 o'clock last night, where originally everything was capped at 100, but now you can include over 100 for all the other benefits. You divide everything, you take all your
Wait, not the
employees out,
salaries, the other benefits
the
can
other
go.
benefits can be added on top of the
Okay.
salary, on top of the 100. You
Right.
take all of your people one by one, add them all up, based on a cap of 100 plus the benefits that I described. You get to a total. That's your total payroll for the year or the rolling 12 months. You divide it by 12 to get your monthly average payroll. You're allowed to take a loan for 2.5 months of your average monthly payroll. So basically, let's say you come out to $1.2 million of payroll all in, including the 100 cap from the employees and the 401k employer match and the health insurance and the SUI SDI. I'll call it SUI meaning unemployment, SDI meaning disability. Come into $1.2 million, you divide by 12. That's gonna bring you out to $100,000, right? You could get 250,000 under the program because you're going to multiply it by 2.5 times the 100,000, which is the monthly amount. That 250,000 then gets funded theoretically, which we haven't seen any funding yet.
Right.
Then what you're supposed to do is then pay for three different expenditures with that money. One is your employees, pay their pay. Two, rent. And three, utilities. Utilities include all different types of utilities: telephone, electric, heat, anything that relates to a utility type bill. What you do then is you look for an 8-week period when you pay those the salary out after you get funded. On the date you get funded, you go for an 8-week period on capped at 100 grand too for the pay based on, like, we'll call it $8,333 a month, basically, which is 100,000 divided by 12. You could basically pay that amount up to, and you'll get forgiveness on that amount for the 8-week time, and the rent and the utilities that are combined all in. Now, the rent and utilities are capped to be 25% of the total forgiveness. So you can't have like 50% rent and 50% salaries. When you add all those in for the 8 week, you may ask, how does this work? Well, holistically stepping back, I calculate as long as you keep a similar amount of employees, that probably 75 to 90% of your loan will be forgiven. Now, how do I get to those numbers?
That's interesting.
If you take 2.5 months, right,
Okay.
and that's around 10 weeks, around about,
Okay.
you're doing 8 weeks of payroll. So 10, 11 weeks, 8 weeks, that's like around, we'll call it 70% of the whole entire loan. You
Right.
pack in your rent and utilities, whatever they may be. Let's say they're about 20% of additionally on top. You're at 90% of your loan forgiven. So based on everything, when you add it all in, what the IRS is saying, or what Congress has said, is we're going to give you that money. We're giving it to you on a 12-week period. We're going to forgive basically 8 weeks of your payroll. So that's like, 65, 70%. And then we're going to also forgive the rent and utilities. So when you factor it all in, 70 to 90% of your loan's going to be forgiven as long as you continue to keep your employees employed. Now, if you're in a business that you can't pay your employees, then here's the question whether you want to pay them. I wouldn't suggest, you got to make a business decision on this, because if you're only getting reimbursed net 70 to 85% of your costs, do you want to pay 15% out of pocket? And also, are you sure that you're going to get all this forgiven and the IRS is not going to come back with more limitations? So you
That's
have
the
to make,
question, right?
that's a big question. So you just want to make sure that you're not doing things for the wrong reasons. So when I say, do you want to pay your employees? If you don't pay your employees during the 8-week period, there's no, I call it like a pot of soup. You're pouring like the liquid in. The liquid is the employees you're paying. You're getting the soup pot bigger and bigger and bigger. And the bigger the pot of soup is, the more that you could forgive on this loan. And if you have nothing in the pot at all, you're not going to be able to have any forgiveness. So that's kind of how it works if you think about it that way. So if you're paying normally your employees on an 8-week period similar to before, then you basically are going to get 70 to 90% forgiveness. And the only exception, there's two exceptions to that rule. One is if you have a lower employee count during the 8-week period, it's proportionally reduced. So let's say on my example, you had a loan of 250,000, and let's say when you go through your calculation, you had 200,000 of forgivable expenses, right? So your 200,000, let's say you had 50 employees and it went down to 40. 20% of that loan's forgiveness is reduced. So that 200 becomes $160,000. So you don't get the full 200 forgiven. So if your employee count goes down, the loan forgiveness drops. If you drop anybody making over 100,000, more than 25% on their pay, the loan forgiveness drops as well. So those are the two requirements that you have to be careful of. Now, it may be difficult for some businesses that can't pay people because they have no work, and they may have a reduction in workforce. And do you want to pay your employees or not? If they're sitting around not working, that's a big question that you have to determine, because you are going to be out of pocket something if you're going to do it. But socially, and also for the morale of your company long term, you may want to do it, get this loan, know that you're going to be a little bit out of pocket, but you're taking care of your whole employee group.
That's a lot of information. Wow.
Yep.
Two things I just want to make sure I understand. The contingencies, which, I mean, that's something that I think anybody who's looking at this, they're going to be thinking about these contingencies. So they must keep their employees, or at least a number of employees that they had when they first got approved, or it's going to proportionally drop.
So it's that's a whole. There's periods on that. So there's two measuring periods you could select. It's a January to February 2020, or there's a prior period like from April to June of 19. You pick your number of employees based on that period, and then you have to. So if you, for example, if your employee count's way up, you could still lay off some people and still meet if you pick the earlier period, because you want to pick the lower period. The lower period, the better, because the lower number you start with, the harder it is to get down to that number.
Right.
So you have to. So with your accountant, you should choose which period makes the most sense. Again, nothing here is non-complicated. I mean, this is, that's why you probably, if you go through this calculation, first of all, you got to make sure with the banks that you're going with the right bank and you're getting your application in. But you also want to make sure that you maximize this thing out to the best of your ability, because if 80% of it gets forgiven, I mean, if you're missing dollars off of it, it can make a big difference.
Absolutely. So that was one contingency. And the way that you use the money, is definitely, there was three ways. I think you said employees, rent, and utilities. That's it.
That's it.
How are they tracking that?
So they're going to ask you on the back end for your payroll. They're going to ask you for your rent checks that you're paying to your landlord, and they're going to ask you for your utility bills.
Okay, so is there something in the application where it says, hey, make sure you keep track of all this. We're coming, and a year from now, we're going to come back and we're going to look at this. It actually makes me think about, remember Katrina? Remember when FEMA gave the money to Katrina after Katrina? And you heard all these stories on the news about, as I'm sure will happen with this, people figure out ways to like try and maybe they don't win, but they try to like work the system. This is going to be a couple of years from now when this all starts kind of, I guess, getting reconciled.
Yeah,
People need to have this information ready to go.
yeah, because you could be accused of committing fraud if you
Exactly.
don't have the information available. You know, they can't get to everybody to audit first off, but the people that they do audit, if they don't have information to actually pay people, it's going to be a big, big problem. So you're absolutely right, and the government has no recourse either. Besides, as long as you do this right, there's no personal guarantee, there's no collateral they can take away.
It's really
And
unbelievable.
it's really an unbelievable program. It really is.
It's like, it's almost like, where's the catch? Like, how can they give you the money and there's no other side to it?
Well, and to even better it, let's say you get 80 to 90% forgiveness,
Yeah,
it's tax free. So if you gross that up, it's more than the original loan. If you earn that money in
that's a
your
good point. The
business,
tax-free point. That I had not heard actually. Okay.
yes. So let's say you get 90% forgiveness and so you get a loan of 250,000 and 225 is forgiven. In order to make that in your business to make, net of $225,000, just think about it. If you're running a business, the government takes almost half your money. You'd have to make almost 400 something thousand dollars.
I'm thinking about those numbers. That's a great point. We got to put that in the final summary on this. That's a great point.
Yeah. So
Wow.
that's the program. There's also another SBA program, which is the disaster loan program. Some people have applied for both. If you haven't, at this point, you can't take both after April 3rd. So if that program came out first, you have to actually show a disaster. It's a 30-year loan. Matt, I could actually send you a summary of the two programs side by side, but there's collateral over 200,000 in that program. The interest rate's higher. They may require a personal guarantee depending on how big the loan is. It's a lot more rigorous, and you also have to show that you had a disaster. This payroll protection program is basically, there's not really a lot of requirements here comparatively.
Yeah.
So this is the way to go. And then you kind of go through that. And there's some provisions with the payroll protection. If you choose that, there's some tax credits that you're not allowed to take. Under the new law, there's a retention credit that gives you up to $10,000 per employee. That gives you a credit against your federal taxes that you pay through your payroll, your payroll taxes. So you take your employees and multiply by 50% of their wages, up to $10,000, and you're able to get a credit. Now, we've done the math here. The PPP program gives you an average 70 to 90% forgiveness. The retention credit on average probably would give you 20 to 35% of a benefit. Now, who might qualify for that? Well, if you didn't have wages during the period that the program counts the wages to figure it out, like your newer business, the newer businesses, you might want to use a retention credit because then you don't pay employment taxes. So if you can't qualify for the loan if you didn't have your business open until now, but you could qualify for that retention credit. So those are situations we've been going one by one. Sometimes the loan doesn't work for reasons that you have no payroll during the period that they're measuring, and you want to take the retention credit instead. It's one or the other. That's what you can get. So just to
Interesting.
let you know. And there's also, if you take this program, there's another thing people may have been asking about. Can I defer my employer payroll taxes? You can't do that. There's a provision in the law that allows you to defer your payroll taxes for the rest of the year and then pay 50% of that deferral in 2021 at the end of the year and 50% in 2022. It's one or the other, either this loan program or the retention credit and the deferral of payroll taxes, not all in. So, it's kind of, you're getting into a little bit of the details, obviously a lot of it, but it is what it is. Just wanted to bring that up.
That's a great point. And by the way, yeah, if anything that you do have, I think that it would be great if we can add that to once this video is up and everybody's watching it. Any of the resources you have, certainly your contact information, because look, anybody that needs help, you're here talking, and we should give people, and I will give people your contact information, and I'm sure you're happy to give people guidance. So we'll put all that out there. And again, the point of this whole conversation is this is a big mess, and people like me who are just running businesses. I'm not a finance guy. I run an IT company. Like, I need help. People I know, everybody needs help. They need guidance. And guys like you know what to tell us.
Yeah, well, we do the best we can because, the laws are changing every day on this because the IRS keeps coming out with different versions of what this all means. The other thing on this is that if you don't have any employees and you make over $100,000 in your business, you could basically take a loan up to 100 plus your health insurance and all the other things. Take the monthly amount, divide by 12 and multiply by 2.5 months. Without anything else, without any other benefits, that's $20,000, like $800 around about that you could get a loan for, and you could still get forgiveness of the whole 20,000 potentially.
Really?
We're waiting to hear guidance on how self-employed individuals get forgiven because it's very vague in the law. We think it's possible. Those applications, the banks are going to start accepting on Friday of this week. They have not accepted that program. The business program with employees have been open since Friday for some banks of last week. Some banks are still not open, by the way, because they still haven't figured out all the rules. But
Yeah, I've been hearing that. It's unbelievable.
And by the way,
if you're a customer of one of those banks, and we were saying a little while ago that you need to get in line quick and get your application in because the money there is an end to it, but yet you have a bank that isn't ready yet. What do?
You got to wait, and you hope that your bank could, do it, or you could go to a different bank that tells you they're accepting. But a lot of them aren't accepting unless you have a deposit account with them.
Right.
It's a big problem.
There's no time to figure it out. You got to get your application in.
Yeah, here, other things in this law, real quick, just switching gears for a minute. What interesting thing that came up on the rebates. So if you're aware that anyone making under 150 married filing joint or 75,000 gets a full tax rebate from the government. I'll go through what that is. It's $1,200 single head of household and $2,400 married filing joint. Plus you get for 2 children under 17 another $500. So it can max out to $3,400 if you have a family with 2 kids. Now what's interesting, and this is interesting for business owners. So let's say it's based on this. The first time I've ever seen this. If they give you the money and you're not entitled to the money, you don't have to return it. So
what?
Yes. So what does this mean? So they give you the money based on your income levels. Once you phase out completely when you make 100 or 200,000, depending if you're single or married filing joint. So the check reduces in amount. So let's say, and they measured on 2000 and originally, if you haven't filed your 19 return on your 18 return income. So for example, my 2018 return income's low. My 19 return income is high. Don't file your 19 return. Hold it. Hold it because you're giving the checks based on the 18 income. It doesn't have to be returned. Be very careful and don't have your accountants file. Now, conversely, I have another situation that's different. So this situation, 18 doesn't qualify, 19 qualifies, and 20 doesn't because 20 is based off of, that's where the refunds are based off of, actually your 20 income, but they're taking it and they're looking at a back of 18 and 19 and saying, we'll give you a check now, they'll give you a check. And you don't have to worry about whether your 20 income is way over the limit. We don't care. If it is under the limit in 20, you could apply for it if you didn't get it. So let's say 18 and 19, you didn't qualify, but 20 you did. On your 20 return, you could get a rebate later on. But let's say your 18 income didn't qualify, your 19 income does qualify, and your 20 doesn't. You need to talk to your accountant right now to file your 19 return ASAP before these checks get cut. Otherwise, you're going to be cut out of the program. So two different situations.
That's so critical to know. Okay.
It's very, very strange, what's going on with this. And everybody's kind of lax because the new policies for almost every state in the country and the IRS is I don't have to file my tax return until July 15th.
Right.
I don't have to pay estimates, which there is a weird thing about this. Business owners, your second quarter estimates due before your first quarter estimate right now. Your second quarter estimates due June 15th and your first quarter is due July 15th. So they have not extended the second quarter estimate if you're making tax estimates on your business income. So that's a weird situation.
Everybody really needs to speak with their accountants. I mean, everybody.
Everybody. There's other opportunities as well. If you had losses in your business, you could carry it back for 18, 19, and 25 years. So that's another thing that they need to speak to your accountant about because you get tax refunds. Under the law, there was no carrybacks of operating losses under the new Trump law a few years ago. Now you can do it. Now they've opened up the period. So again, everyone needs to speak to their accountant about a multitude of different issues. Some of the people who may be getting IRAs, they don't have to take their minimum distribution this year. You could basically hold off on that. So that's a pretty big thing too. And your IRA contributions that you get a tax deduction for, you don't have to make it until July 15th of 2020. So again, you should be talking to your advisor about some of the things that you can do. Some of these things are really important because you can miss opportunities if you wait too long.
Yeah, so you need to do something now, and that's a message that everybody that's watching this really just take. We've probably Ken's given at least 10 or 15 valuable pieces of information here that, and they're all important. But talk to your accountant or your advisor right now.
Yeah, and the only thing that we didn't cover significantly on your original outline was the sick pay leave. So just going back for 1 minute, if you're an employer, if someone's out for the virus, you have to pay them. You have to put a poster out that basically to your employees electronically saying that you have to cover sick leave. You got to pay them for 2-week period. The government reimburses 100% of that pay if they're sick because they have the virus or think they have the virus or a spouse has it, up to $511 a day. If someone needs to be home for their child that's under 18 years old because school's closed, they reimburse you 2/3 of their pay, up to $200 a day. And that can be extended, that child care, another 10 weeks. So you might wind up paying for 12 weeks. And how do you get the money back? On your payroll tax deposits every time you do a deposit, ADP or Paychecks or whatever service you're using or whatever payroll service, they're going to reduce out what you owe and they're going to sweep less money out of your account.
Okay.
So you need to make sure to talk to your payroll provider if you're paying these benefits, to tell them how you're doing it. And they have special codes that they've set up that you have to do through your payroll to signal what it is in order to get a reduced payroll tax deposit. That could be done with the PPP program. Those two things can both be done. The sick pay leave, if you're paying someone, and you can still have the PPP program. So I just want to be very clear on the sick pay that this is important. What documentation do you need? HR attorneys are telling me anything you can get right now because people are very sick. They may not give you much. If they give you an email just saying I'm sick with the virus, that's good enough. Put it in your file. And then go from there and start claiming these payroll tax credits. And the payroll tax credits are against 100% of their pay. Just to be very careful. They're reimbursing all the pay, 100% if they're out for the virus, and 2/3 of their pay in total if they're out because they have to care for a child and can't work. And if you have zero payroll tax deposit, there's a form, I think it's called Form 7200, that you could fill out to get the remaining balance back to you. So let's say, for example, your payroll tax deposits are $5,000, but you're paying $10,000 to your employees for all the sick leave. You file that form and ask for another $5,000 because you can't ask for more than paying zero deposits.
So look, somebody comes into your office and they just say, okay, what do I need to know? What do I do? It almost sounds like it's almost like a check sheet of like, okay, let me kind of profile this person and see like where they fit into what box.
Mm-hmm.
And then you're kind of spitting out like, okay, here's all the things you qualify for. Here's like all the things that you can benefit from. And so this really is a consultative conversation. It's more than just like a tax conversation. It's like it's the whole picture. So you really do need we can tell everybody go talk to your accountants, but if your accountant doesn't have this broad scope, like this picture of all of it, you really could be missing on some things. So
Yeah.
is it almost advisable to have, okay, you have your CPA, you have your tax person, but you actually need an advisor that's almost like a supplemental person on top of the CPA, right?
Potentially,
Or
and
one
yeah,
and the same, like you.
potentially you have to read a lot too, because I read yesterday, that on, I think it was around April 1st, and this is New Jersey, Governor Murphy signed a bill to allow for a 90-day stay on your mortgage payments for home residents. So again, that's just another thing, and each state may be doing that. And what does that mean? And how does that mean? Can you not pay your interest? Does that get backed into the loan? But the fees are not, there's no fees. They can't go after you. You have to call them on the phone and ask for a 90-day stay. So, and the banks are supposed to not load that 90-day into a 3-month payment. They just extend your
Like
payments
all at once.
yeah, 3 more months.
Just roll the whole thing forward.
They roll it forward. Now, whether they include some interest in it, each bank is, some of them are forgiving interest, I believe, and some are not. So it depends on your bank. You have to ask the requirements, but it's just about looking at all different stuff, because
Right.
it's not just these things that are passed, like each state is passing different things as well. So yeah, if you don't have all that information, you may need someone beyond, the person who you're looking.
Yeah. So you might need a team. I mean, you might. So this hopefully brings awareness to people where they're hearing so much information, and you're giving all these different perspectives. They'll know. A person would know if you're talking to your accountant when you're doing your taxes, or actually, we were saying before. Hopefully today, as you watch this, you're contacting your accountant. You'll know if you're not hearing all of these questions being asked. Now, at least you're informed enough to say, hey, what about all these other things? And not that you want to, go to different people, but you should stop and say to yourself, like, all right, I love this person and I'm loyal to them, but they're not asking me the right questions. They just haven't been educated enough yet. It all happened quickly. I got to bring some other people into the conversation.
You got to make sure the person you're working with is proactive. The
Yeah.
one thing that we do is we go through our whole entire list. We actually develop task force because you deal with, again, like everything else. You work with some of the larger clients you have, and you call them directly. The smaller clients, what we've done is we've set up task force with our team. Everybody calls, and then if they need me to call in on the call for something, then we'll go from there. So it's one at a time, making sure that everybody's touched and everybody gets a call and it's personalized to every single person. And one person in our organization can't do it all, so you have to break it out.
It's enormous.
Yep.
It's unbelievable. You could never have imagined this. This was it's definitely a story that you can't write this story.
We're living in another world right now.
We are.
It's
So I
really.
have a question. So are you guys going to be staying in a work at home model at Sobel?
We've had a model to work at home whenever you want already. So I've taken advantage of it like once every 2 weeks when I had nothing scheduled for the day, or I was heading back, from a client's office and it wasn't far from the house. Our other employees have done it as well, but we do have some employees who want to work from home full time, and we do have requirements though, because you've got to be very careful on how that works to make
Right.
sure they're regularly communicating, make sure that they're on platforms like Teams. So we have Teams, so they have to be on Teams at all times, and to get text messages through Teams saying, or instant messages saying, I need you to call this client, or I need you to do this. There's no compromise in that. You're running a business. So you could definitely, from our standpoint, we're okay with it as long as they're productive. But again, we want people in the office once in a while. It's nice to see people.
It really is.
It really
It's
is.
even nice. I haven't seen you in a while, and we haven't seen many people in a while. And doing this is it's crazy how this now satisfies like the human need to socialize.
Yes.
But it's like right now we're just walking around our neighborhood, and like 6 feet away you see somebody like, hey, how are you? It's like it's very anti. It's not how human beings operate.
No, it's a weird. I wonder when we'll get back to normal. I hope soon.
Hopefully soon. Um, do me a favor. You covered so much, and I was trying to take notes as fast as I could, but my 5 pages of sloppy notes. Could you summarize maybe I don't know, five, six, seven, what are the top things that you think are the takeaways for anybody watching this?
Okay. First thing is, if you haven't heard about this Payroll Protection Program, immediately get on this to get this done. Because if you're running a business and you haven't received that loan, you need to go and apply for it. At the same time, make sure your bank is accepting it. And if it's not, find an alternative bank that will accept it. There are also other lenders that are kind of pulling these things together as well that may not be traditional banks that you could go to. So that's one thing that's extremely, extremely important. Two, if you have a problem with those rebate checks, make sure you talk to your accountant about that so that you're able to get those refunds. Because if you're not entitled to it right now, but are entitled it to 19, get your return in. If you aren't entitled for it in 19, but are in 18, don't file your return. Hold off. Tell your accountant not to file. Big thing. Third thing, make sure you know that you don't have to pay your taxes until July 15th. Now, you could file your return now if you need to. It doesn't mean you need to pay your taxes. So just hang out, if you need to file the return for that rebate program, and wait, and then let's say you owe some money, don't pay that to July 15th. Don't worry about the payment. It's not when you file your return that you have to pay your taxes, when the taxes are due. So just to be very careful to know that. Four, talk to your accountant about any provisions that you may be able to take advantage of as a business owner, like operating loss provisions, provisions that may potentially benefit you as a business owner or even benefit your employees. There's a provision out that you could give your employees money under this disaster relief and not tax them on the money. So that's something you may be interested in. There's things like that are out there. There's a lot of different programs. The fifth thing is, personally, make sure you have everything in gear. If you're having struggles with your finances, a lot of people are here to help. As far as companies like your mortgage provider, they're required by law now to help you out. So don't feel that you're having too much pressure there. Same thing with businesses, by the way. Most businesses have held off their payments to their vendors for 90 days. Also, as well, have called up their banks and said, I'm not paying your loan for 3-4 months. Some of them have received 6 months of non-payment of loans. So don't be shy to call the people right now. Be proactive on this, because if you're not proactive, then you're going to have a problem. But if you're proactive, you'll be fine. And I think the last thing, I guess, is just if you need help outside of anyone you're getting advice from, and you don't feel like you're getting full advice, make sure you find the right person to help you with the things that you need, because you need to have a holistic approach on this.
That's a fantastic list. I am going to put all of your information, as I said, down below. So anybody who's watching this, I strongly advise that they reach out to you. And I'm sure you're happy to just give advice like you're doing here. I appreciate you taking the time. I'm grateful that you took the time. I know that what you sent me was so helpful. It led to this, and I feel like this is really going to help a lot of people. And it was so. I have one question, one favor to ask. As you're finding things out or hearing stories that you think may just be worth sharing, maybe shoot me a note, and maybe we could just jump on and do a 5-minute talk and say, look, here's an update. Here's something that just happened. Here's something. It's a lot to ask, and I know you're busy, but if you feel like it might be fun. We'll just kind of keep putting little bits of information out. This isn't going to just be like we all apply and we're all good. I feel like it's going to continue to be this weird moving target.
Yeah. So what I'll do is I'll send you updates, and if you feel that you need a 5-minute call for an update, then we'll jump on a 5-minute call.
I'll be the guinea pig. If I don't get it, that means I should record it. We should help people.
No problem.
But it was great to see you again. Hopefully, I'm stuck here in Florida. I can't come back to Jersey, it looks like, for another month. So hopefully I'll see you soon when I can get back up there. And again, thank you so much. I'm grateful for you taking the time. I really appreciate it.